Everything's in the stock market is rallying today, and we got gold taking part as well. Let's bring in Scott Bauer. Let's talk a bit about these precious metal moves. So Scott, gold finally gets a bounce, a pretty big one, 2%. We've been looking at the charts saying, okay, maybe you can find some support if you take it back like a decade to here. What do you think?
Well, not only gold, how about silver also? Silver rallied about 6% today. But, you know, in the gold space, it was due for a little bit of a bounce, which I'm a little skeptical about right here. And, you know, we've had this conversation, Oliver. I've been a gold bull for so long. And last week we were on and I said, okay, you know, enough's enough here. Look for some consolidation. But
right.
if you look at GLD, which is the gold ETF, this thing bounced right from the 200-day moving average. I mean, it couldn't have been any more, you know, spot on from a technical point. And that 200-day moving average was, you know, around 168.5 or so. There's a gap above here in GLD, which is at around 172.5 area, which equates to about 1860-ish or so in gold. I'm looking for gold to fill that gap and then retreat back here. I think from a technical standpoint, this is going to be a really good near-term trading range that bounce off the 200 up to that gap. So I'm very sideways, if you will, in gold over the next couple of weeks, especially this week, you know, with Powell, Mnuchin, Fed's coming out in a couple of weeks here. I don't think gold's going to make a real big move out of this range.
And Scott, last time we spoke, you're kind of describing it as this sort of no man's land for gold right now, where you're hesitant to really pick a big direction. I know you are looking at a trade right now, though, that might make sense after we find a little bit of a bounce. So walk me through it. Where is there opportunity right now, do you think?
So this is in GLD, and this is really working off those two levels that I just talked about.
Okay.
That, you know, kind of 168, 169 area of the bounce up to 172.5. So what I'm doing is I'm selling an iron condor, selling a put spread and a call spread at the same time with December 18th expiration, so a little over 2 weeks. So it's the 169, 166 strike put spread, also selling the 173, 176 call spread. I can collect like $1.70 for that because volatility is really ramped up in there. That's a ton of premium. That's well over half the amount that this trade could ever go to, which is $3. And if we do get just some sideways movement, little back and forth between those ranges there, this thing's going to do great.
Okay, so now I like this, Scott, because basically what you're doing, correct me if I'm wrong, you're putting gold in a range, basically, right? Yep. Saying that there's a lot of folks betting on volatility, hence the premium, and you're just going to collect that and sell it to them and expect gold to not make a big move in either direction through either of those wings of the condor.
Exactly. Over the next 2 weeks for GLD, 167 to 175 is my ideal range. Basically anywhere in there, I'm going to make some money. And looking from a technical standpoint, you know, that looks just fantastic. You equate that to where, you know, gold is trading, and it's not a one-for-one, but you know, you can see that same range in gold is probably around 1770 or so, all the way up to like 1860.
Okay, that's gold. Do you trade silver, Scott? What do you think? I've heard that you know, some folks call this like the higher beta version of gold, but others like that it's kind of got arguably more connections to kind of cyclical metal demand as well.
So it's a little of both, and you can see that in the move today with gold being up about 2%, silver being up about 6%. So,
right.
You know, that is a humongous move here. But silver, or at least the SLV ETH here, is actually coming up to some pretty big resistance here at the 50-day moving average. So, you know, I'm not buying into this rally here. I want to see it either propel through there or come back down to the point it was at around 20.5 or so before I would think about it again.
I'm looking at the support right at $23, which basically is where silver has bounced pretty consistently. So it hasn't broken through some of the same types of support that gold has, which is pretty interesting, where I think that on a kind of short-term intraday basis, you get that beta on the swing, but in terms of what it does over the bigger picture, it does seem like silver's got a little bit better connection to some of the rotation that's happening in the market that's more economically centered.
It does, and probably less of a correlation to all the monetary policy and to what the dollar is doing and other currencies are doing. And, the focus right now is really on reopening, whether it's here, whether it's, in China, which is obviously a big, a big point that we look at to see what silver is doing. So, yeah, I like the fact that it is tied to that as opposed to more or less monetary policy, which is, really on everyone's radar right now.
Got it. Scott Bauer, nice conversation here on the metals. Continues to be a good one, watching the way your trading perspective changes with the market, especially on gold, looking at a range-bound trade now for GLD. Scott Bauer, CEO of Prosper Trading Academy.
Thanks, Oliver.
Thank you, sir.